Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, August 10th, 5:42 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. We're going to take a look at some growth stocks that lagged today. We sold a few things, took some low-risk entries in a couple of other things, but the theme that started with last Friday's employment report that was stronger than expected. Rates rose, and they've been up for the three straight days now. Tech has alternated between caring and not caring, but it did care today. You can see what just happened. Tech pulls back as rates rise. We're going to dig into the charts and take a look at what's going on across the indexes and the leading stocks. So state of the market, we're still in an uptrend with the exception of small caps that are lagging. If you see over here, leading stocks, we're showing bullish uptrend. Short term, meaning where are the five major indexes versus their 21-day short-term exponential moving average. They're also in an uptrend. The yellow arrow there signifies the weakness on small caps, and that's the same situation using the intermediate term 50-day moving average. In an uptrend, small caps lagging. Over the long term, using the 200-day moving average, we've been in an uptrend since last July. So as I mentioned, what just happens today, what happened today, tech pulls back as rates rise, and we're keeping our eye on a big CPI report Wednesday morning at 8:30 Eastern Time. Back in May, we had some surprise inflation that really caused some volatility in markets, and these monthly CPI reports have been closely watched ever since then. So we'll see what happens at 8:30 tomorrow. But on the day, S&P 500 up 0.1%. We saw a lot of money flowing into cyclicals, value stocks, copper, steel, oil. That offset some of the money coming out of the NASDAQ 100. S&P up 0.1%, NASDAQ 100 down 0.5%, Dow up 0.5%, mid caps up 0.35, Russell up 0.2. Let's take a look at the index charts. But first, let's take a look at the team running Revere Asset here. You're interested in a completely transparent, education-focused, registered investment advisor that actively manages your portfolio to get into the strongest stocks in the strongest sectors during an uptrend and take defensive action when things turn sideways or turn south. We'd like to speak to you about managing your account. Give us a call. 855 Real Wealth. That's 855-732-5932, or you can email any of us. This is Dan, the majority partner and president. Dan's a CFA, very knowledgeable in all things related to finance. We're taking a look at somebody that's trapped in annuities right now and paying some enormous fees and seeing how we can help them out. We're going to talk about that on our podcast this week. Here I am over here on the far right. Feel free to reach out to me too. I'm Don at revereasset.com, or you can really email any of us, Dan, Tim, Hunter, Muriel, Alex, or Don at revereasset.com. Or as I mentioned, give us a shout at 855 Real Wealth. That's 855-732-5932. Let's take a look at a couple secondary indicators quickly. Fear and greed index still showing fear at 36. Let's see how the put call closed today as interest rates, they're rising, they're volatile more than normal. That causes some angst in the market, but the put call not really showing it today, 0.73. So let's get to the charts now. We're going to start off here with the NASDAQ 100. Let me blow this up a little bit. So on its surface, everything normal here. We look at the chart and then we look at relative strength. This chart looks great in an uptrend. All pullbacks are being contained by the 21. Let's see how this is working relative to the S&P 500. That's what the relative strength line does, and you can see not a lot of outperformance in the NASDAQ 100, kind of going sideways over the last 3-4 weeks. In fact, we made a higher high here. Relative strength, I don't think, well, it did. It made a higher along with that. But note the pullback over the last 3 days, and that started with the jobs report coming out on Friday. So let's take a look at IEF, which is the ETF that tracks the 10-year note. So here we are Friday. You see a gap down and then a lower low on Monday, lower low on Tuesday. When the price is down, that means the yield is up. Let's take a look at that 10-year yield. You can see the gap up here follow through to the upside. So we're right back around where we were in the middle of July and the beginning of July. Prior to that, we hadn't seen those rates since February. So you can see rates going up here, and then they rolled over, came down, made a low here in the third week in July, rallied up a little bit, but failed at the 200, pulled back again. Now we've gotten above the 200, and if you want to just go by a short-term trend, this green line here, that's the 21-day exponential moving average. That contained the pullback in rates over the last 6 or 7 weeks, but now note how that has turned up now. The black line is the 200-day moving average, so we've made a higher high 3 straight days along with higher lows. Let's see what happens with the CPI coming out tomorrow morning at 8:30 Eastern Time as we're running into the downtrending 50-day moving average. Note in this area here, which was the beginning of June and the middle of June, the last 2 times we touched the declining 50-day moving average, we were rejected by it. So in tandem, the 21 and the 50 were going lower. Now we've got the 21 turned up. Let's see what happens when we hit the 50 here. That would be a few basis points higher. So that's your 10-year note. Let's take a look at the S&P 500. Made a higher high, in fact, an all-time high, but didn't quite close there as we pulled back a little bit. Notice the tight ranges over the last 3 days as the market is doing some rotation in between sectors. Let's quickly go back to the QQQ here and let's take a look at a 15-minute chart. So you can see here was Friday, the gap down with the employment report. Market completely shook off the fact that rates were higher on Thursday, and then we had a gap up today, challenged the prior highs from Thursday, but failed. And look at this big whoosh down here. Yes, that's a technical term. A whoosh down happened right after 10 a.m. Leaders started to sell off. We had a bounce back up, but then gave it up pretty quickly. Let's blow this out a little bit to a 60-minute chart and see where we stand here. So key level today, we want to keep an eye on this. This big move down here was on 727. I believe 727. What happened that day? Let's take a look at my notes here. Tech leaders down. Nothing really major stuck out to me. That was just a day where defensive stocks, all the indexes were down, but tech was down a little bit harder, and then we regained that, had a nice little run up here. Here's your top right now on Thursday, and we're looking good early, outperforming, but a big whoosh down here. Whoosh, yes, at 11 o'clock Eastern time on a 60-minute chart that was really closer to between 10 and 11 o'clock. So let's go back to the daily chart. Let's take a look at the Dow Jones Industrial Average now, which outperforming at all-time highs. Relative strength ticking up over the last week after lagging for quite a few weeks. So this signals a little bit of rotation going on into more defensive areas and out of tech. How about mid caps, MDY? You can see them now consolidating above the 21 and the 50-day moving average, and the 21 is going to come up through the 50, increasing relative strength over the last 2 weeks. And finally, what has been lagging, small caps, still can't get above the 50-day moving average, but at least They are seeming to hold the 21, so we're trapped between the 21 and the 50. Money comes into commodities and rates go higher. That's going to mean that means banks will go higher, and if oil continues higher, will be a big push for small caps to go higher also. So some of the proxies that we keep an eye on that also confirmed weakness in tech stocks today. Let's go through them. QQQJ. This is kind of a mid cap. Nasdaq 100. It's 100 mid cap stocks, and you can see that it was down 0.8% today. Let's take a look at ARK-K, the Cathie Wood ETF, another good proxy for growth leaders, down 2.6% today. In a tight range, was trying to break out here above this 122 level, but failed back below it, but is still sitting on the 50-day moving average. Another one that I like to keep an eye on, FFTY. This is the IBD 50, down 0.8%. IWO, which is the Russell Growth, underperformed today, down 0.3%. So that means that IWN was up on the day, 0.77%. So average the two of them. That's what your close was on IWM. And finally, another one that I started tracking, PDP. This is a momentum ETF. Also, Dorsey Wright Technical Leaders also lagged today, down 0.41%. So it was consistent. And when we see that our stocks are lagging, we take a look at these indicators to see if it's really the broad growth fishing pond, so to speak, that is lagging, or if it's just our individual stocks. We've got our stops in place as always, but we want to know what the trend is across the board, because that trend, you see PDP here, dropped from 93 to 78. This was the big sell-off that we made us take a look at our approach and how much quicker we're going to lock in stops. So you can see this big harsh pullback here from February to March happened in, I'm going to go through these ETFs again, and you'll see it was consistent. And I did a webinar on this about how we evaluated our internal process, and are going to not give gains back, and are going to focus in on identifying these downtrends in a more timely manner. So you can see this was, and if you look at the S&P 500, there was really virtually no pullback whatsoever. Same thing with the Dow. So this was really what we refer to as a silent bear market in growth, as you saw 20% pullbacks in pretty much most of those indexes that I just covered there. So let's talk about some individual stocks that we own. Steel Dynamics bought last Friday. That all steel stocks had a very nice breakout today with volume across the board. I'm going to run through a bunch of these. First, let's look at the ETF SLX breakout there with volume. Nucor has been the leader lately. You can see you're seeing volume and a breakout in so many of these. And when you see it in a group move, pay attention to it. Now, if this were to become undone tomorrow, that just could mean it's a failed breakout, and let's see what happens from there. And that could be dependent on what we see with the CPI, or it could be a continued move back into cyclicals. Let's see what copper did. FCX is Freeport-McMoRan. You see coming back up through the 21 and the 50-day moving average. This led for a while when cyclicals led, harsh pullback, held the 200-day moving average, ran into the declining 50 and failed. Now back up through it making another run. TX is the leading steel stock. This thing has just been an absolute beast. This was outperforming while the rest of them were lagging, and it continues to lead. This was kind of the idea behind my FNV buy, Franco-Nevada, with this big move up here, even though gold stocks were lagging, but the combination of higher rates, a stronger dollar, and look how bad GDX looks, just continuing to make lower lows. So we got stopped on FNV, the last part of that, today when it broke the 21-day moving average. What else did we get stopped on? I sold some ZI yesterday. Hunter talked about this last night as they announced yet another offering. And today, Franco Nevada also sold a little bit of DocuSign on this failed breakout, basically for break even. So we're being very diligent about protecting our cost basis. We bought it back here on the move off of the 21, tried to breakout failed. This still looks fine. We still have our core part of it, but get out, break even when you can. With broad weakness in the growth leaders today, we took some of that off. Snapchat attempted to break out, but also reversed. We added to our position there, but had to close it out by the end of the day as this reversed very quickly along with that reversal in growth leaders. And INMD, we got stopped out on this on the break below the 21. So honoring our stops, what's working, we're continuing to stick with, using a combination of the 50, the 8, and the 21-day moving averages for our stops. Two positions that we added today, AMD pulling back. It initially bounced and got back above the 8. That's where we took our an initial position in this. Closed below the 8. We won't give it much room. If it breaks below today's low, we'll be out of that. Little starter position in that. And also Dexcom, which was another big winner in earnings, pulled back, bounced off 500, reclaimed the ADMA. We took our position there, but continued to sell off, so we're down by a couple of percent on this one. And again, not going to give these things much room. The best trades should work right away, and there are really so many stocks to pick from that are working that you can catch another train leaving the station if you get stopped out on one. But as always, we're looking for good risk reward and putting the odds in our favor, monitoring what's going on with the growth indexes, the growth proxies, as well as the overall market, and monitoring sector rotation. And today was a move out of growth leaders and into cyclicals. If that was a one-day wonder, we'll see. Maybe the CPI report tomorrow morning at 8:30 will give us some more info. That's going to wrap it. As always, I'd love to hear from you on Twitter at dvandenbord, email don@revereasset.com, or once again, the phone number 855-REAL-WEALTH. Wrapping up Tuesday, 8:10. This is Don Vandenbord with Just the Facts. Thanks for listening and have a great day.